A very good evening to all of you and warm welcome to this week's weekly market presentation by SC Securities. I will be looking at the market updates, key economic highlights, and also global commodity markets and the international financial markets as usually I'm doing. Starting with this week's market updates, if you can see in the screen, except for Monday's trading session, for the rest of the three trading sessions on Thursday, Thursday and Friday, market ended up in red zone. We had a public holiday on Wednesday, so market receipts actually didn't take place on that day. So if we have a look at each of the days separately, when it comes to Monday, SPI went up by 11 points to close at 12,470.81, slightly up from previous day's closing. And S&P SL 20 index also went up by 15 points to close at 4,335.35. Trading took place. And at the beginning of the trading session, SPI showed 128 points sharp gap, crossing the 12,500 benchmark level, but later it was consolidated value below 12,500 level. And when it comes to turnover, that was only amounted to be 2.2 in 4 months. And the said price increases was majorly led by counters Aitken Spend, Sampath, and Dialogue, and whereas high net worth participation could have been observed from the counters RCL, SoftLogic Live, and also LOLC counters. So when it comes to foreign buying and selling topped, recording a net value of 81 million over 39 million of foreign purchases. So during Tuesday's trading session, market came back to declining trend, whereas SPI index lost 106 points to close at 12,364.80, and S&P SL 20 index also lost 18 points to close at 4,217.23. And this declining trend was basically due to looming economic conditions, economic worries, where investors keep on worrying about the existing forex crisis and the debt pricing, how the government is going to manage it. So with all of these kind of macroeconomic uncertainties, we are experiencing a declining trend these days when it comes to Colombo Stock Exchange proceedings. So when it comes to turnover, that was slightly higher from previous day and amounted to be 3.2 million. And whereas the foreign buying and selling, again selling top of the day, amounting a value of 73 million, whereas only 47 million of foreign buying reported. And during Thursday's trading session, SPI further declined by 12 points to close at 12,352.38, whereas S&P SL index, on contrary, gained 7 points to close at 4,228.63, slightly up from previous day's closing. And market is continued to experience a declining trend because of the ongoing economic crisis, and also there is some kind of a forced selling scenario is taking place within the market, and it's expected by majority of the parties, if the indexes are going to keep down in the remaining days as well, there can be much more of a forced selling will be coming to market, since some of the buyers do had their transaction based on broker credits. So when it comes to turnover levels, that was further increased to 3.8 billion for the day. But anyhow, for the third consecutive session for the week, foreign selling topped at 39 million, whereas only 23 million worth of foreign buying reported. So during the last trading session on Friday, SPI further declined by 218 points to close at 12,130 8. And S&P 20 index also further declined 83 points to close at 4,140.65. Turnover was relatively higher, amounted to be 5.1 million, and that recorded to be the highest for the week. And this turnover was majorly boosted by LOLC Finance. And for the first time in the week, foreign buying topped, amounting 54 million, whereas only 43 million of foreign selling reported. So when it comes to the entire week, SPI declined by 2.70% and S&P index also declined by 2.24%, and the market exhibited a net foreign outflow of 99.4 million. So with the ongoing uncertainties, it is kind of a harder thing to predict what can be happened in the market in the coming period. But anyhow, if this declining trend to be continued in the next week as well, we can hope there can be some kind of post selling will be taking place, go out from the market if that kind of a trend to continue. And then moving to economic highlights for this week. As of the latest statistics from Central Bank of Sri Lanka, it's reported that Sri Lanka's trade deficit has further widened during the year 2021, and the trade deficit for the year 2021 was amounted to be US dollar 8.13 billion, 2 billion up from the previous year's figure, which was only 6 billion for the year 2020. And that was basically due to the upstick in imports contrary to exports. And December deficit solely accounts for like 1 billion. Imports for the year rose up by 28.5% to record a net value of 20.6 US dollar billion, whereas export segments also witnessed a noteworthy increase, a significant upstick during the year 2021, and that has also increased by 20%, but only reported a value of 12.5 billion US dollars. So that's what the reason for the further expansion in the trade deficit. And these also come under a situation that the government take much of efforts to reduce the non-essential imports to country in order to secure forex for essential imports. And if we have a look at the import structure for the year, fuel was denominated, and that contributed to the most to import expenditure during the year, and the fuel imports expenditure rose up by 47.2% year-on-year basis, and that was followed by textile and textile articles segment and also chemical products. It should also remind that the import expenditure went up for pharmaceutical and medicine category as well because of the ongoing vaccination rollout and also the increasing COVID numbers. So the required medicine for COVID patients need to be imported. And then moving to the next one, the central bank keeps on encouraging investors to invest in Sri Lanka development bonds. So far up to 15th February, central bank managed to raise a total worth of US dollar 111.5 million through Sri Lanka development bonds. But it has been recently expressed by Fitch Ratings that 6.5% of assets in Fitch-rated banks are invested in low-rated Sri Lankan sovereign bonds and also dollar-denominated bonds, and that actually create kind of an asset quality pressure on the balance sheets of the banks in Sri Lankan banking system. Further, with the increasing inflation figures and the weakening economic activities and also highest interest rates could depress borrowers to neglect from repaying their loans as the COVID-based, the pandemic-based relief measures are also soon to be end. So because of these reasons, it is forecasted by the Fitch Ratings that there can have some sort of a asset quality pressure on behalf of the balance sheets of Fitch rated banks in Sri Lankan banking systems. So, moving on to the Treasury yields. Treasuries for this week marginally declined, and the central bank sold a net 79 billion worth of treasuries, and the 3-month Treasury yield declined by 2 basis points from 8.52% to 8.50%. 6-month yield more or less the same. It remained at 8.54%, and 12-month yield also declined by 2 basis points from 8.59% to 8.57%. So if we have a look at the exchange rates, Sri Lankan rupee depreciated over US dollar, Great Britain pounds, and Japanese yen, whereas it was slightly appreciated over euro. And it has been telling that some of the parties, like the exchange rate, can move up to 300 levels if the central bank didn't take necessary precautionary actions. And then moving to global commodities, differently impacted by the ongoing geopolitical tensions between Russia and US, as Russia is planning to invade Ukraine. That has a kind of an effect on both commodity markets and the financial markets, both in kind of a different way. So oil prices hit its highest levels during Thursday, managed to touch 95 point, and but headed low by the very end of the week, as there is a kind of an idea that the extra supply from Iran can be disrupted due to this invasion of Russia over Ukraine. And gold prices also slipped on Friday, but throughout the week it kept on increasing because investors rattled to safe havens like gold over relying on risky stocks and other commodities, as there is a meeting to be held from the both parties involving US military and Russia to discuss about the invasion that Russia is going to take place. And copper prices are also expected to increase in the coming periods, as Peru, being one of the largest manufacturer, has been undergoing some kind of political tensions, and aluminium prices also increased during the week with the anticipation that if kind of a sanction imposed on Russia, there can be a major hit to supply of aluminium. And the same scenario, the geopolitical tensions of Russia, Ukraine, the invasion made an impact on global, the international financial markets as well. So US stocks lowered on Thursday, as the president of United States of America declared that Russia is soon to invade Ukraine. And with that, the Dow fell by 1.78%, S&P 500 also declined by 2.12%, and Nasdaq also declined by 2.88%. So the same rally from Wall Street, followed by Asian shares as well. So Asian markets, majority of the Asian markets also increased some price decline during Friday's trading session. Japan's Nikkei declined by 0.41% during Friday's trading session. So that was basically from my end. From here onwards, Harin will continue the presentation.
Thank you, Sachini. So let's look at US oil, what has happened during the past few days, and what's currently happening in the US oil. So as we can see, oil made a high of 95.79 USD per barrel on 14th February. So after making that relevant high, the price got rejected from that key daily resistance of 92.94. So currently it's heading towards the region of daily support level 83.85. So like Sachin said, with the current supply and also the invasion that's happening between Russia and Ukraine, this mainly has a impact on the US oil. So the RSI is in the mid range. It has cooled down. So it was basically about the level of 70 when it was basically trading in between the days of 11 to 14th. So we were able to see the RSI actually going above the level, and it sustained at the level of overbought region, and now it has actually come down, and which is in the mid range. So oil seems to be quite declining, and we do have a minor support level, which I have drawn in this yellow rectangle box, which is somewhat near the level of 87.5, 88.5. So the price is actually trading at currently trading at 89.93, and price is currently fluctuating as the market is still open. So if the price continuously decline, we might be able to see it coming towards the daily support level 83, 85. And with that being said, if it manages to get rejected, which is manages to get rejected from 8th February low, which is 88.5 and 87.5 and 88.5, we might be able to see it moving towards the daily resistance 92, 94. But at the moment, it seems to be price is quite declining in US oil. So looking at our all share index, so we were able to see some sort of a, we would say, correction in the market, and we were able to see some selling pressure coming, and we were able to see some sort of retracements happening, and how the index was making certain lower highs and lower low formations. So on February 10th, it made a low of 11,927.12, and then from that key area of daily support, which is 11,950, 12,000, the index went towards the level of daily resistance 12,450, 12,500, and made a high of 12,590.8, and from that area we were able to see the index getting rejected and declining, as it is basically trading below both the 18 and 8 moving averages. So the RSI has come down to the level of 38.62, which is still in the mid range. So what could happen is the index could come down to the daily support level once again, 11,950, 12,000, since it made a low on February 10th, which is 11,927.12. So after reaching that certain daily support level, 11,950, 12,000, 12,000 being a strong psychological area again, we might be able to see some sort of consolidation happening, like what happened on February 10th and February 14th. So this could actually, the consolidation could carry forward. Else, if it manages to break the daily support level of 12,000 psychological area, then the next daily support 11,450, 11,500 could be tested. So and also if it manages to basically get rejected from the daily support level 11,950, 12,000, we would be able to see it moving up towards the daily resistance 12,450, 12,500, that key area again, which could possibly indicate us that the index would be basically ranging in between the level of 12,000, 12,500. So overall, looking at it from the moving averages, since the index is basically trading below the moving averages, it seems to be pretty much declining, and it's in a bear market. So looking at our top pick of the week, which is Expo. So Expo basically was consolidating previously when it's started to trade from beginning of January, and it was consolidating and made certain highs and tried to sustain above the psychological area of 400, which it failed, and the declining momentum carried forward, and then it made certain lows, which are which made it come down to the level of daily support 300 and 310. So as we can see, it is struggling above to trade above the daily resistance 345, 355. So whenever the price comes to that key area, it gets pulled back again. So whenever the price comes to the daily support also, which is 300, 310, the price seems to be getting rejected from that zone as well. So here we do have some sort of ranging happening. So looking at the moving averages also here, what we can see is previously when it was basically trading above the moving averages, we had a quite momentum and it was bullish. So now, since the price is basically trading below the moving averages, we what we can see is there seems to be some sort of bearish momentum happening, and so at the moment it's quite ranging in between the level of 300 355. So if it manages to break the psychological area of 300, it could fall further down to the next daily support of 255 265. So it would basically range between the level of 300 355. So hopefully if it manages to cross above 355, it would basically make its high towards 400. Else, if it basically trades below the level of 300, we might be able to see it coming towards 255 265 region. So thank you, and I hope you all have a wonderful weekend. Thank you. Please do like and subscribe to this video. Thank you.